this morning. Dan Deming of Equity Armour Investments joins us. Dan, should the average investor be worried about this market and the current conditions?
Well, I don't know. It depends on what your outlook is. As far as, if it's longer term, then probably not. If it's shorter term, if you're looking for something like at year end and moving into early next year as far as momentum in the market, then yeah, I think you have to be a little concerned. When you see the reaction that the VIX has basically indicated the last couple of days, now up over 20, you're seeing, markets starting to move significantly. And the driving force is, oil's on the minds and, the talking points across the board. But really, when you look at oil, you got to look a little deeper. And I think if you look a little deeper, you look at the high yield space of the junk bond market. Look at an ETF, JNK. It's down significantly these last couple of weeks. And I tell you, 19% of that ETF is made up of oil sector issuance. So basically, I think there's great concern out there in the credit markets that this low oil prices are going to put pressure on some of these drillers and whatnot, moving forward as far as their debt obligations. And I think that's really what's caused some of this uncertainty, as we roll towards the middle of December, I should say.
What about the Russell? Because we did see a bit of a buying binge this week in the Russell.
Well, and that's seasonal in effect, so that you do have that seasonal effect rolling into December, into January, where the small caps typically do outperform, the mid to larger cap stocks. So I think that was just a standard rotation. Or ultimately, maybe that's somewhere where you could look for some protection here, or maybe a better return versus the rest of the market. But, eventually, Angela, if they can't sort this thing out, and if there are some stress levels out there that, the market's not comfortable with, then it's going to drag all asset classes down, except volatility, which appears to be going higher right now.
Dan, thank you for your insights.
Thank you.